Hello and welcome to your Global Markets Technical Outlook as we draw towards the end of quarter 2 of 2021, brought to you as always by helixtrader.com. Normal disclaimers apply, of course, as we get straight into the US stock market, where we see the market, of course, making new all-time highs on the S&P 500, up well clear of that 4,000 mark now, up in the 4200s in fact, and you can see it came out of this broadening formation, which is a little bit unusual. Normally we find the a rising wedge as the trend develops and gets more mature, but here we see this broadening formation and then we had that massive breakout. So it does seem there's a lot of strength still in this market. The market's making all-time highs. That has to be bullish for this market, so very strong on the monthly chart. Onto the weekly, and you can see how it did briefly come back and try and test that 4,000 level as we might expect it to, and it's now reverted and pushing once again back towards new all-time highs. On the Ichimoku chart, we can see again very strong, price well above the cloud, the lagging line or Chiku span also well above the cloud, and we're seeing the cloud nice and thick, which is usually a sign that the market is strongly trending directionally. And we've got the cloud support round about that sort of 3,400 to 3,600 area, and that's obviously increasing through time as we push out into the future months. Digging into some of the market fundamentals now, and the market breadth, the bullish percent index now printing a value of 78. So 78% of stocks bullish or making short-term upside breakout patterns. And you can see that there was a little bit of divergence sort of second half of last year and into the start of this year, but that now seems to have broken and up to the upside, which is obviously bullish, and a value of high 70s, pushing towards 80% of stocks is very bullish for the market. That's usually a sign that the bull market is intact, and it's clearly got broad support across a wide range of stocks. And same for the stocks above their 200-day moving average. This actually printing a higher number, 84% of stocks above their 200-day moving average at the moment. You can see that's been very stable through the tail end of last year and into this year, remaining in the sort of mid to high 80s. Again, that's very bullish for the market, and we're not seeing the sort of degradation or divergence that we would normally begin to see as if we are coming into some sort of top. So it doesn't seem that we're there yet. Same for the advanced decline line. You can see here it's in line with the market, making new all-time highs itself as the market is, and certainly no sign that there's any selling going on just at the moment. So are there any signs of weakness? Well, I've picked out a couple here. One is the semiconductors. So if we look at the ratio of the semiconductors versus the S&P 500, semiconductors obviously a very speculative side of the market. It tends to lead the market both up and down. And you can see it's the ratio of the semiconductors to the S&P 500 just starting to show some divergence there in the last quarter or so of the price action there. It doesn't look terminal as yet. I mean, that it can revert back the other way as we saw back here in 2019. So I wouldn't call this a flashing red flag yet, but it is just something to be aware of, that there are signs in weakness. Somewhere else we can see relative weaknesses in the discretionaries versus staples, and it's a similar pattern here. So normally, of course, we would expect the discretionaries to outperform the staples when the economy is running well, and you can see here that relationship just starting to sort of drop off a little bit as the market continues to rise. So that's a couple of things just to keep an eye on. Looking at the relative performance of the major indexes since the start of this year, and you can see that there's the Russell, in fact, which is the sort of more the value end of the market, the smaller cap stocks, that's leading the charge up at about 18%. The S&P 500 is around about 12%, and the Nasdaq bringing up the rear around about 7% gains since the start of this year. One takeaway from this chart, I guess, is if you look back to the start of the quarter, which is round about here, you can see that most of the indexes are actually tracking sideways, and they haven't really made much progress since around the end of March period. So just a loss of momentum, really, or it could be accumulation that we're seeing, ready for the next rise. So we'll just have to wait and see how that plays out. On the yield curve, we see bond yields across the board actually just starting to drop off a little bit. It's not really affecting the shape of the curve at the moment. The curve is still quite steep, but across the board, we're just seeing the whole curve sort of starting to slacken off there as these bond yields start to fall a bit, and that really should be bullish for stocks, especially the so-called duration plays like the large growth stocks, the tech giants, the FANG stocks, and so on. They're quite susceptible to higher yields since most of their earnings are out in the future. And you can see here that while the yields were rising up into that sort of first quarter there, we're just starting to see them drop off, and again that should be more bullish for those growth stocks. So if we see yields continuing to fall, that should perhaps give the stock market another bit of a fillip to make another leg up perhaps. On the sentiment, we were keeping our eye on this sort of bullish extreme where, call mania had got its grips on the market, and we saw the put-call ratio dip way down here. Obviously, no demand for puts round about this area here. That has actually now sort of reverted and fixed itself, if you like, in quotes, and it's back in that sort of central zone there, so it's not at an extreme at the moment. Now this obviously indicates that there are more demand for puts more recently and less demand for calls, which pushes this ratio up. So that could indicate market participants buying protection, or it could just mean that there is less demand for calls as we sort of push towards these all-time highs, with the market just looking a little bit overbought perhaps. And you can see the effect of that here. This put-call ratio being right down in these very low levels for quite a time. This is looking at the 5-day simple moving average of the put-call ratio. But, it's really been in this situation for months, and we've not seen any reaction from the market. Normally, when it gets down this low, that's an extreme. We'd expect a sell-off in the market, but certainly not seeing that at the moment. It just makes you wonder what's going on here, whether this is some kind of new normal that we're seeing here, or whether it's a build-up to some sort of climax. But obviously the market's not reacting just yet, despite how heady it is looking on the price chart itself. On the VIX index, we are seeing the VIX now drop back below that elevated risk area for the first time, really, since the pandemic crash last year. So this is obviously bullish for the market. If the VIX remains below this sort of low 20-ish area, you can see back here through 2019 and earlier, where the market was just in a steady uptrend, how the VIX allows that to continue, if you like, and so these lower values tend to lead to more upside in the market, as long as it doesn't spring back into those higher 20s or low 30s. Then that should indicate that we see further upside in the market. On the seasonality, this is the S&P 500 to date with the annual seasonality here, as you can see, month by month. For my money, it's a decent match. It's very hard to draw conclusions about these cycles with such a small sample size. We're only looking at less than 6 months data here, but we had that low towards the end of January, again another low at the beginning of March, and then we had that uptrend through February March and April, and now just perhaps that low in May being indicated there. So if it is following along with the seasonality, the annual seasonality that we would expect, typically, in the northern summer months, we see this sort of more, the market enter the so-called doldrums, where it just sort of goes sideways for a while as they're, the traders from the large institutions and money managers and so on take their annual vacations, so there's not really much happens. So it'll be interesting to see whether we get that this time, whether the market just starts tracking sideways from here. Interestingly, on the next chart, which is the presidential cycle, looking at the post-election year, which we're currently in, obviously. Again, it's a decent match. This time it's the Dow Jones that we're tracking, but it's a decent match here. As you can see, we sort of push off that late January low and then push up into May time here, where it hit just a little hit a pullback on the actual chart. The pullback on the cycle is just a little bit later. But interestingly, this cycle is actually indicating a very strong July and into August, so that will be interesting. One of these two or none will be right, or none of them will. So it'll be interesting to see which one, whether either the presidential cycle or the annual cycle. So place your bets. And on the decade cycle, we are just in this sort of one area, year one, obviously, 2021, where we are. And you can see that the decade cycle is maybe just indicating that we perhaps sort of start coming off into falling into a low within year two. So obviously no sign of that at the moment, but that's one indication. And Calvert-Clark's pressure chart here also indicating that we're starting to see rate of changes starting to fall in the overall cycle scheme of things. So whether that again has any effect as we get towards the end of this year, we shall have to wait and see. Switching over to the Australian stock market now, and the Aussie 200 making new all-time highs. Once again, it's broken above this pre-pandemic high, let's call it, from about 7,200, and it's now above that area. So just starting to look a little bit overbought. Obviously, it's quite extended to the upside now. So perhaps we see it taking a bit of a pause around this area. Now it's printed that new high. And on the weekly chart here, you can see once again how we got that little build up below the old 2007 all-time high. Then the spurt above did come back a little bit, didn't quite make it back for a retest, and then blasted through the recent, or the 2020 all-time high. So yeah, just starting to look a little bit extended, and it hasn't really had a pause for a few months now. So so perhaps we just see maybe a pullback or even just some consolidation up at these levels. Looking at the comparable indexes, you can see that the Aussie 200 is actually doing very well relatively, up around 10% for the year. S&P 500 just a couple of points higher. Hang Seng is about half of what the Aussie does, and the Shanghai just bringing up the rear there, about 3%. Again, what's interesting are this vertical black line I've put in here, just indicating the start of the quarter that we're in. You can see that most of the index is just tracking sideways during that period. It's not been a fantastically good period for trending markets. And again, you wonder whether this is accumulation or whether it is distribution. And obviously, we've got no indication of which it is just yet. But you would, usually after one of these periods of consolidation, you do get a directional move one way or the other. On the currencies, the US dollar index is at a critical junction, back around this 90 area here, where it's tested it once here, tested it once again, tried to push off, and it's right back here again. So obviously got the US Treasury bond yields falling, which is a bit of a headwind for the US dollar itself. So we'll see whether that causes this to actually break down, and as you can see, there's not much support below that level, so that would be we might see quite a significant move if this does start to fall, and that would obviously benefit the cross currencies and also commodities markets as well. Looking at the Aussie dollar, the little Aussie battler here, still sort of punching up towards that 80 level. Hasn't quite got through it yet, but it doesn't seem like it's wanting to retreat back towards 70. So just maybe gathering a bit of steam here. Perhaps we're seeing a bit of accumulation in the Aussie, and again, that if we do see more weakness in the US dollar, that's obviously going to help the Aussie, and perhaps we see it just punching above 80, and that would be significant. That would make the news, because that would break it above these old highs. If it got up to 82, for example, where that's the highest it would have been since 2014, in fact. So that would be quite something. On the euro, still quite bullish for the euro, just holding above this 120 level, which was that's a long-term area for resistance and support. It obviously broke out of this downtrend, and it's tracking higher. And again, weakness in the US dollar assisting the euro right at the minute. On the British pound, it's a similar story, but not quite made it above its line of resistance, which is at 142 there. Just perhaps trying to gather a little bit of momentum under here. I mean, it's a decent move up from those lows around about 120, and it's certainly broken out of its downtrend, but just trapped below that 142 level at the moment. On the Japanese yen, well, this is now sort of indicating that false breakout that we saw above this symmetrical triangle was in fact a bull trap, and we're now seeing it fall down below that level. So, but still very much part of this overall sideways pattern. It's not unusual for these symmetrical triangles to sort of complete, and then the market just continues to track sideways. So we may see that rather than it falling back to this lower level of support down here. But one to watch. And Bitcoin, of course, has been in the news lately because of this almighty pullback that we've seen. I mean, it's a volatile. Can we call it a currency? Let's call it a currency. It's a volatile currency anyway, and it's it's halved and doubled for quite a lot of its existence. So I don't think we should be too surprised at a 50% retracement. I guess the question is where to from here. It doesn't look like it's ready just to bounce back straight up. That would be a surprise. Looks like it probably needs to consolidate a little bit in here, but there is still a lot of demand. It is still seen as a thing of the future, and so I wouldn't be surprised if there are buyers in here, which we can see from those long tails there. So it'll be interesting to see whether it can push higher from here. A fall back to 20,000 would be a long way. That doesn't seem likely at this point, but you can never rule anything out when it comes to the cryptos. And lastly, onto the commodities, looking at oil firstly, and it has now broken above this downtrend that we've been watching since the recovery back from that sort of crazy negative value that it had. It's up around 69. The next area of resistance would be around about that 76 level. So we'll see what happens if it can make it up there. I would guess it would run into a little bit of headwind as supply comes in. So, but still looking quite strong overall for oil. And soybeans, I know a lot of people like to follow the beans, as they're called, and you can see here it's been a really meteoric rise for the price of soybeans, just running into some resistance around about this old high here back from 2008. So that would be the pre-GFC high. It's just ran into that. Actually found a bit of selling as it came up into that level. So it has had a huge run. It's looking very extended to the upside. I wouldn't be surprised if we see some sort of decent pullback on profit taking. That would pull it back into here, but still looking very strong for the soybeans. Gold having another attempt at this 1925 area after this failed breakout, this bull trap, if you like. It just poked its bed above. I mean, it had come a long way very quickly, but now it's pulled back, and it's actually found some buying again, and just having another nudge at that 1925 area. So we'll see where that one goes. It's looking quite bullish if you look at the gold-silver ratio. I don't have the chart here, but have a look at that, and you'll see that that's now breaking out to the upside, which generally is positive for the precious metals. Copper also running into a bit of resistance here. Again, it's also had a very meteoric rise and just running into some resistance as it sold 2011 highs there before it went into this huge sort of sideways consolidation symmetrical triangle pattern. And again, I wouldn't be surprised to see some sell-off here, but copper is very much in demand. There's way more demand than supply out there, so I don't think there's anything that's going to cause copper to fall way back to the levels we've seen it at before. It does seem to be one that's got a lot of demand behind it. And just finishing off on iron ore, we can see here that it has now established a new line of support here up at this 175 level. Came right up, very overbought, obviously, pulled back, and within a week it was back up at those 200, 210, 213 now levels. So still very bullish for iron ore. On the rounding all that up, you see the US stock market still in that uptrend, and it does seem to have broader support when we look at the market breadth and so on. So just maybe perhaps looking a little bit overbought to the upside, but there's nothing that seems to be on the horizon that could be a catalyst for this market having a serious hiccup at the moment. But of course that can all change in any minute. The Aussie 200, we're obviously seeing that breaking out to new all-time highs, and again looking a little bit overbought, so perhaps just a breather at this level, or perhaps a pullback and a correction just to allow it to sort of gather its strength again. On the currencies, US weakness, just US dollar just at that critical level, which is obviously helping the other majors that are crossed with it. And on the commodities, we're really seeing strength across the board. It really is a commodities bull market at the moment, so all looking rosy there. If you want more information about me, you can find me at helixtrader.com or drop me a line at my email address there. Always happy to take your questions or discussion points. And if you know anybody who would find this video interesting, please ask them to jump on and subscribe at the website. And with that, I will wish you good luck, good trading, and bye for now.